Inflation for the month of October came out this morning and it is going up. It is coming out at 2% on annualized basis, still under Bank of Canada's target range. But we did not see Chrystia Freeland coming out and congratulating Canadians, because for the past few months, whenever we had the CPI report coming out or Bank of Canada's announcing rate cuts, she was coming out and congratulating Canadians as it was a biggest achievement. But maybe this reading is not fitting her narrative anymore. Who knows? But what does it mean? Does it mean that the Bank of Canada is going to start pausing on its rate cutting cycle? I don't think so. Because when we look at the further under the hood, we realize that the shelter and food prices are driving the CPI inflation. Okay. Energy is down, pretty much the rest of the stuff is down. It's the food and the shelter. Those are the main components driving the overall CPI bucket. But I wanted to remind you that there is no inflation. It's only the currency debasement. So the way they calculate inflation is just using this CPI, this consumer price index, or people call it CPI. That is heavily manipulated. If you're only looking at CPI to gauge the inflation in the economy, you are misled. Okay, they use CPI for assessing, interest rate policies, monetary policy, benefits, and all that stuff. So that is driven through the CPI KPI. But if you have to understand your own financial condition and you have to understand, okay, where my finances are going and how my expenses are going out of control and how should I look at my finances going forward, don't look at CPI. Look at the currency debasement. Look at the money supply in Canada. So let me give you this chart. So if you look at this chart, you realize that this is showing you a money supply growth in Canada since 2020. Okay, in 2020 it was around 1.786 trillion. Okay, now it is 2.579 trillion dollars. So the money supply in the last 4 years has gone up quite a bit. Okay, so from an annualized basis, it is 8.2%. Okay, that's the growth rate of the money supply in Canada. And for the past 12 months, it has gone up by 5.68%. So in the last 12 months, it has gone up 5.68%. On a annualized basis, for the last 4 years, it has gone up by 8% plus. So how come the CPI is 2% when the money supply is going up at an annualized growth rate of 8%? This is what you have to look at. Okay, if you have to understand, is your money being debased? Is your currency being debased? Are you losing your purchasing power? You have to look at the money supply, because money supply means the currency is being diluted. You have heard about the stocks being diluted, right? When the stocks are diluted, what happens? The stock price goes down. Okay, this is exactly the same phenomena. If the money supply is going up without increasing the overall real GDP, that means your currency is being debased, your purchasing power is being robbed. It's an indirect hidden tax that is being taken from you without you realizing. Okay, so the inflation is a lie, CPI is a lie. The real inflation is currency debasement. Now, the point is how we can protect ourselves from this currency debasement, because this is going to continue, guys, and this is going to get further deteriorated over time. Why? Because look at the debt. Look at the balloon of debt that the government has. Not only the government, but also the household have. Anyway, household will have to pay from their own purchasing power anyway, but the government can print money, literally. The only way they can pay off that, sovereign debt that they have is through currency debasement. It's by printing money, because the debt to GDP ratio is over 100%. So once you pass that limit, there is no way to produce enough productivity in the GDP growth to pay off that debt. Okay, because the GDP is going down. the overall trend is going down because your population is going down. Okay, Canadian society is rejecting immigration. That was the only hope to sustain that GDP growth. Now, if you remove the immigration factor, literally you have no way to grow the economy and grow yourself out of that debt. So the only solution left is currency debasement. It's going to happen. Now, all of us, have to protect ourselves financially from this massive currency debasement that is coming our way. How? Well, buy hard assets. Don't just buy real estate, because real estate, if it's a primary residence, it's fine. Don't go after rental properties. In Canada, it doesn't make sense with the laws, with the taxes. It doesn't really make sense. If you want to invest into real estate, buy in a country, in a location which is landlords friendly, lower taxes so that you can manage it. Okay. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later. In Canada, it is impossible practically, to be honest. I have been landlord. I have learned through hard way. Okay, so buy technology-driven stocks, AI-driven stocks, which is going to explode in the next 5 years. Invest into Bitcoin, which is going to explode in the next 5 years. I'm not saying that go and buy the top. Right now, Bitcoin is at $92,000. Not the right point to go into the market. There will be a dip at some point. Keep an eye on that. Get into Bitcoin, because that is the future. Okay, I know some of you will tell it's a scam, nothing is backing Bitcoin. We have seen since 2008, with all these speculations, with all the FUD and negativity around Bitcoin, it is standing at $92,000 today, whether you like it or not. Okay, so those who understand the value of Bitcoin, they are investing into it. Okay, it's up to you want to take advantage or not, totally your choice. I'm giving you some options to consider to protect your purchasing power, because that is being robbed from you by this system, by this government, and it is going to continue. Anyway, you let me know what you think about that. Put your comments down below. If you like this video, give me a thumbs up, subscribe, check the description for some links, and check out the newsletter that I sent out every week. And if you'd like to read about these topics, subscribe, and I'll see you in my next video. Take care.